So wait a minute. So you were on a nuclear sub. How
Yes.
many sailors are on the sub?
130 people.
Okay.
Longest we went out for was 10 weeks submerged.
Okay.
Which, look, I know it sounds crazy, but when we're 24, you do things that are the craziest thing is you have 24-year-olds right now driving nuclear submarines. I mean, the captain's asleep in the stateroom. It's 2 a.m. It's a bunch of 24-year-olds and 19-year-olds driving nuclear submarines.
Oh my God.
Wait, I look back on
so
it.
how do you end up on a sub and not like an aircraft carrier, for example? Who makes that decision?
That's what I volunteered for.
You wanted to do that?
Yes.
Why?
Because aircraft carriers, you are 100% of the time in the engine room below the water line. On a submarine, 130 guys isn't enough to actually really be that specialized. You've got 14 officers and you're doing everything. You're doing the engine room, your torpedo room, you're actually driving the ship. A nuclear engineer on an aircraft carrier is never going to drive the ship.
They just sit in one room the whole time.
And it's below the water line and it kind of sucks.
You guys have it's not like shore leave and right? You're just under.
Well, exactly. And with submarines, the idea is stealth. So you come out of Norfolk, Virginia, you transit 8 hours and you get past the continental shelf. You submerge and you don't get seen again. That's the whole idea is like if a satellite goes over Norfolk, Virginia at 9 a.m., they see there's 6 submarines at the pier. They come back for the next pass, they see there's 5 submarines and they don't know where that 6th submarine went.
And that's the whole point of the submarine it can't be detected.
By the way, this is timely. Rest in peace, Gene Hackman. Crimson Tide.
I know, that was a good movie. I actually saw that movie, of all things, with my commanding officer in 1994.
In the submarine.
Actually, no, we were in, I think, Kings Bay, Georgia. But we were on
Denzel
shore.
also?
It was Denzel. But it was the most uncomfortable 2 hours, this mutiny movie. And I'm sitting next to my captain. I'm like, hey, jeez.
What are we
going to talk about? How are we going to debrief this?
Crimson Tide. There's a bunch of great submarine movies. It's like its own subgenre.
What's one with Sean Connery?
The Hunt for Red October.
Hunt for Red October is classic.
Yeah.
Wow. Did they get it right? Crimson Tide. They nailed it?
Well, I wasn't on ballistic missile submarines. Totally different thing. But pretty much they've got fail safes for what happens if you get a garbled message, which was the crux of that movie. I don't think you shoot on that. Again, I wasn't a ballistic missile submarine, but the premise is something that has certainly been thought
through.
So
yours was more like a leisure submarine?
Yes.
Okay. This ballistic missile, what's the kind that you run?
Fast attack submarines. The goal of which is to go into the Soviets' backyard and keep track of everything they're doing with their Navy. So that, remember Hunt for Red October, the USS Houston, that was a fast attack submarine, same class that I was on. The idea is to get behind their ballistic missile submarines. This was Cold War doctrine. So that if it ever went hot, the first thing we would do is put torpedoes on ballistic missile submarines before they had a chance to launch.
You think Josh could have made it in a submarine?
No, absolutely not.
In some ways, yes.
1 hour.
I mean,
well, what are the amenities?
I
don't know.
The Lido deck does not exist.
I could make it on the Four Seasons ballistic submarine.
You would have been very welcome. You would have been very welcome. Some people that we, hang out with on the show would not have been very welcome. We're not going to name names. You would have been very welcome. I don't think you would have enjoyed it.
A lot of Jews on these submarines generally, or no?
You were the only one.
Were you the only one?
Josh, can we play this clip before we get started? It's 40 seconds. It's a good one.
Because I like you.
Okay, thank you.
The answer is of course yes. All right, bear with me.
This is Kevin Hassett, economic advisor to the president, author of the famed Dow 36,000.
Okay.
Not wrong, but early. Volume
hold on, volume up.
Mr. Waltz, on these potential checks that you might send out from Doge, is there a concern as you're thinking through this that they could be inflationary?
Oh, absolutely not, because imagine if we don't spend government money and we give it back to people, then if they spend it all, then you're even. But they're probably going to save a lot of it, in which case you're reducing inflation. Okay, so and also, when the government spends a lot, that's what creates inflation. We learned that from Joe Biden. And so if we reduce government spending, then that's, reduces inflation. And if you give people money, then they're going to save a bunch of it. And when they save it, then that also reduces demand and reduces inflation.
The smile on his face is what sells it for me. He looks like He looks like he's trying to sell a monorail to Springfield.
That's a great reference.
He's the guy that wrote Dow 36,000
97,
in 99 as the Dow was breaking 11,000, after which, of course, it went straight to 6,000. And he eventually was right. We did do 36,000.
Give the man his flowers.
And then some. He's also a George W. Bush retread. I think he's been hanging around different Republican presidents for a long time. That's a great explanation for how Doge stimulus might work. disinflationary because people will save it. All right. We ready to go?
Let's go.
All right.
Let's pod.
Nicole's rocking the sweatshirt today.
Episode 180.
And now, a word from our sponsors at Betterment. Imagining a better future is the first step.
Investing in that future with Betterment Advisor Solutions is the next. Whether you're launching your own practice, looking to streamline client onboarding, or just searching for efficient ways to scale your firm, Betterment is here to help.
They automate to make tax optimization simpler. They provide support to make administrative tasks easier.
At Betterment, they are building innovative technology, all for anyone who's ever said, I think I can do better. So grow your RIA your way with Betterment Advisor Solutions.
Learn more at betterment.com/advisors. Investing involves risk. Performance not guaranteed.
Episode 180. Jim is like, what's going on? Dude, I can't believe it took us this long to have you on the show.
I'm delighted to be here. Thank you.
You descend from Wall Street royalty, which we're going to talk about later in the show. We are.
Yeah.
We're gonna give the Lebenthal family their flowers. Let me give you the official introduction. Jim Lebenthal is the Chief Equity Strategist and Partner at Cerity Partners. He has over 25 years of experience managing investment portfolios and is a regular contributor on CNBC to literally the best show on CNBC, primarily the Halftime Report. Prior to joining Cerity Partners, Jim served as the Chief Executive Officer and Chief Investment Officer of Lebenthal Asset Management, was a financial advisor for Goldman Sachs, and a partner of the investment firm Levy Harkins. Jim Lebenthal, welcome to the Compound of Friends.
Josh, I am truly delighted to be
You hear
here.
the crowd?
I was going to say, can we get these applause tracks for the halftime report?
Maybe laugh tracks. All right. First things first, we're so excited to have you.
Thank you.
I have to tell you, of all the people that I appear on TV with, I think you're one of the longest lasting castmates on Halftime. You've been with us, I don't know, since...
I think it's 12 years.
12 years.
Hard to believe.
So I'm slightly senior to you, and I remember your first appearance.
It was.
Do you remember your first appearance?
Well, my first appearance was actually on the 5 p.m. show. That
And
one
I think I was
remember.
on that with you too.
Okay, so I was called on to pitch a stock, and it was Caterpillar. I don't know why I remember it.
Yeah.
This was the late summer of 2013.
Okay.
I pitched the stock. Whoever else was on the show, asked me some questions, fairly innocuous. What's R&D going to be in the third quarter? Whatever. And then
You had that wrong, by the way.
I'm sure I did.
If I recall correctly. Okay.
But then, for whatever reason, I went away and said, all right, that's that. And the next day I got invited back, and it happened again and again. This is kind of a funny story. Can you give me a little runway on this?
I want it.
Okay.
I want it. That's what you're here for.
Okay, but I don't know the time length, so I'll watch your eyes.
There's literally
anyway.
no length of time.
Okay. So for the next several weeks, I would get called on to the 5 p.m. show, Fast Money, Halftime Report, and I had no idea what was going on. They'd call me up. Remember Lydia?
Yep.
She'd say, come on. So, all right.
Ooh, that's a deep pull. Shout out to Lydia.
And then all of a sudden I was getting these month ahead schedules. I was like, all right, I'll just go with it.
Yeah.
It got to a point I was still doing, I've talked to you about this. I was still doing some other channels, which shall not be named, the
Yeah.
Lord Voldemort of channels.
Yeah.
And I was on a 5 o'clock appearance, and Lydia called me up the next day and said, we can't have that. We can't have you appearing on our show.
Yeah.
And, and
So
on
make
the
me a
dregs.
contributor. What's
So
up?
they made me a
Give me
contributor,
the contract.
and then that was it. And
Okay.
the rest, as they say, is history.
You having fun still?
I am having fun.
You are.
I am
could tell-
having fun.
I could tell that you're having fun these days. I also remember, because I remember my own, we all have like these rough patches where it's like, I don't know if I could do this anymore. But then you come through to the other side and it's like, this is the best. There is no better gig in financial media, I would say.
I completely agree. I'll even admit there are some days, in the last year where I'm like, oh man, that just really stunk.
Yeah.
But our mutual friend, Michael Farr, said something to me about 3 years ago when I was bitching about something that had happened on the air. And he just really shut me down in a good way. He said, Lebenthal, there are thousands of people who would crawl over broken glass to be where you are.
It's
and
true.
it just, thank you, Michael, that is just always in my head.
It's true.
Gratitude is the right way to be.
Yeah.
Yet certainly there are things we can be upset about, but it is very wise philosophically to be grateful for everything that
Well,
happens.
I could tell that you're having a good time. And by the way, you've been mostly right on the big picture, and a lot of people don't realize how hard it was to be bullish. Not just in 2020 when we had that recovery. Everyone enjoyed that. That was a lot of fun. You stayed bullish through 2022, and you never gave up. And then in 23, there was like a bank panic and a 100% chance of a recession. You would not give in on that no recession call. And then, of course, by the end of 23, it became fashionable. But like, no, but you really stuck to your guns, and you were mocked a little bit, ridiculed sometimes when the market was down big. And I always admired that you were able to do that.
Side note, which is important, you
Yeah.
are a wonderful friend to me, and I
Oh.
appreciate it. Just, seriously, sometimes you rib me. I know it's in good jest, but at the
Yeah.
end of the day, I know that if I'm hurting, you're going to come to my rescue, and I
This
really
is true.
appreciate that.
This is
I
true.
know it's true.
This
I know
is
it's
true. All right.
But
We're-
I just want to say one thing that
Please.
I think you and Michael will probably agree with is that going into 2023, there were people coming on the air routinely and saying things like, "Our economic model shows a 100% chance of a recession."
Yeah, that was like the Bloomberg consensus of economists was 100% chance of recession.
Ridiculous. Not the call, but the 100% probability. Jim Grant, who I think is a friend of yours, a friend of mine as well. When I was coming out of the Navy, I spoke with him, and he impressed upon me in a very memorable way the ability to predict the future. Like he asked me how long, like showed me a chart of the S&P 500 going up through the 90s. He said, "How long do you think this will last? And how certain are you?" I said something stupid like, "I know it'll last another 2 months." He
Right.
raised his eyebrows at me and said, "Really?"
Yeah.
And that's all he had to say.
I think the reason why
Wait, why? Because of how certain you were on the
because
timing?
the certainty. So
Okay.
when people tell you, I'm pretty sure you guys agree with this. When people say, "I am 100% certain of something that's going to happen in the future. I know this is going to happen in the future."
Yeah.
It's almost a tell to go the other way.
Yeah. Well, when everybody agrees too, is like, that's an even better tell.
Well, this is why, in my opinion, we avoided the recession. Because everybody knew it was coming, air quotes, and they prepared ahead of time. I think corporate America especially said, all right, the game has changed. Dara was the earliest to this at Uber and said, we have to do things differently because we're being judged differently. And that's S&P America, but even Main Street America, everybody braced for impact, and therefore we avoided the impact.
I think you're exactly right. Particularly as you were speaking, I was thinking about the degree to which corporate America bonded out the debt side, the liability side of its balance sheet.
Yeah.
At
That too.
incredibly low
Yeah,
rates.
that too.
I think you're right. And honestly, that actually wasn't my thesis. That just happened. I was just looking at all these news flows of hundreds of billions of dollars of CapEx being reshored. And something that I've said a lot, and I said this to you a second ago, Mike, right now, you got to separate politics out from policies. The politics is emotion, and it will get you going in every direction.
Yeah.
Least likely is the direction you want to go. Policies at that time were such that people were, every Taiwan Semi and those Arizona semi plants, that was announced in 2020. I mean, that was well before the CHIPS Act. This was going on, and I was looking at that, and I was saying, these hundreds of billions of dollars are going to come home to roost.
Yeah.
That's what I thought was going
We're
to
going to do we're going to do a whole bunch on the reshoring theme, which is another thing that I think you were early to. But I want to start with Nvidia. So the reaction today in the stock was really interesting. We're recording this like 3:00 on Thursday, so
It's pretty gross.
of course things can change. This is one of the best earnings reports by any company ever in the history of earnings reports, just on its surface. But this is also a stock that's gone up 5x in the last 3 years, and it's become really hard for them to produce upside shocks. Like it's almost like they've run out of superlatives. And so you have GAAP operating income for the quarter up 77% year over year, which is amazing until you consider that the comp is like 150, right? So like that's the situation NVIDIA's in. Net income up 80%, earnings per share up 82%, data center revenue up only 93%, 16% sequentially over just the last quarter. So these numbers are huge in terms of like growth rates, CAGRs, et cetera, but it's NVIDIA. Everybody already owns it. second largest company in the world, you know, shock me again to the upside. And it's really hard for them to do. That's my read on the post-earnings reaction today. The stock is down about 6% on the day today.
After opening up 3%. That is fugly.
Yeah. What are your thoughts on the post-earnings reaction here?
So Josh, I tend to pay attention to valuation, and I'm looking at the stock from a valuation point of view versus its growth rate of earnings per share, which I feel pretty confident about for the next year at least. And I'm saying this is kind of a bargain at this price. Maybe you're right that nobody is left to buy it, but I actually think there are a few people. I feel like, on our show, I feel like there are times that people come on and they're like, oh, I don't own it. I'm like, okay, well, now's your chance.
People who bought AMD can sell that and buy this.
Yeah, well, and just to be kind, some people probably bought Broadcom and are feeling like, okay, well, now's my chance to switch out.
But Jim, you're right. Like, if you're a growth at a reasonable price investor, this is reasonable.
It's very reasonable. I mean, the PEG ratio is like 0.7. PEG ratio, I don't know if how many, you guys know it, but PEG ratio, price to earnings over the growth rate of earnings. It's a way of saying, at least for a guy like me, is 28, 29 times earnings, is that expensive or cheap? And I will tell you, if you've got a PEG ratio below 1 for a company of this quality, it's phenomenal.
Right. What's the earnings growth estimate for full year 25? Is it like 60% or something?
I think it's 50%, but
so it's 29 times earnings, but the growth rate is 50%. Like, why wouldn't the stock be a buy here?
So you like to make up reasons for why stocks are selling off. So what do you think? Why do you think investors
I thought I just spent 10 minutes articulating that.
Why
do it again?
Why do you think? Yeah.
Should I do it through interpretive dance this time?
I wasn't impressed.
Okay. I think
I need more bullshit.
I think a stock like this needs upside shock to continue to go up, and you didn't get it.
So what are they buying? What are they buying today? Because they come out of Nvidia. Where are they going?
They're buying Starbucks. Obviously.
Josh is a big. They're selling this and buying that guy.
Okay. I am, because I believe that the money does go somewhere. I don't think people sit with cash in a portfolio for more than 15 minutes. That's my personal view on the investing public. Not institutions, a little bit different. The investing public, they take a profit in something, and then what? They slam the laptop
He doesn't
shut?
get that when the stock is down 6%, the money just disappears. He thinks it all comes out
Of
and
course
goes
it
somewhere
doesn't.
else.
It goes somewhere else.
Yeah, okay.
Well,
People sell a stock at 128
Bro, stop.
and buy another stock at 54.
Embarrassing.
Why? Where does the money go?
Look,
The fabled money heaven?
I completely agree you should separate the buy and the sell, but as I'm listening to you all, I'm thinking about are these zero time to expiry options, and people, I mean, I know I'm going a little tangential at
You're
best
deep
to what
in that,
we're
right? You're a
talking
big
about.
zero DTE guy.
Yeah, you feel me.
That's really your world that you inhabit.
But I mean, that is the ultimate roll of the dice, and it's just a matter of time until the snake eyes appears and they wipe out the craps table.
I do think that Nvidia has this kind of circus next door. That's an options / leveraged ETF circus, and it's kind of like its own casino that's like built alongside the hotel Nvidia, right? And there's a lot of activity that happens intraday with the stock that has, of course, zero to do with anyone's fundamental outlook for the company. Nobody engaging in that behavior is looking at PEG ratio. Mm-hmm. And if you're a long in a name like this, you kind of have to just accept like a lot of the things that are going to take place on your screen have absolutely no bearing on what you're doing in the stock. And I've come to terms with that a very long time ago. And I don't know what's happening today. Like, to me, it's, I don't know, outflows from a 2X leveraged ETF that collected $12 billion in the last few months. Maybe that's what's going on.
I bet you they're finally selling NVDL, the double levered ETF.
That makes a lot of sense.
And that hits the common. Of course it does.
Yeah. Here's a what if, and I think this is actually what may be occurring. Just the law of large numbers here. What if the stock from here to year end was up 10% or 15%?
Yeah.
That
it's
actually
like being down.
That's my point. Is people are going to feel lousy about it, but it's still going to be like well ahead of what the S&P long-term average is.
Yeah.
By the way, I mean, look, I have to give you credit on
you do.
How
He'll
early.
take it. He'll take
That's
all
in
of
your
it.
that's in your contract.
There was a funny time. It wasn't funny at the time, but this was 5 years ago when I was Intel and defending Intel, and it came out with some crappy report. And I was trying to defend it, and you absolutely body slammed me on it.
I'm sorry.
No, it was okay. It was it was right, and eventually I got out of it. But
I remember that. That was yeah. I'm sure that was fun for you. Welcome to my world. One of the things that we talk about is like the idea that there used to be so much turnover in the top 10 stocks from the 70s to the 80s to the 90s to the aughts. It was always turnover. There's always something else. And now the Mag 7 seem completely, the moat seems to be impenetrable. It's miles wide. There's not going to be a new entrant. And I think we forget that like Nvidia did it, right? Nvidia was nowhere.
That's a good point.
Like Nvidia, they fucking did it.
Yeah.
So they have, throw this chart on. Chart coach Sean made a chart showing Nvidia's revenue by segment. And this was a gaming company.
Yes.
Like straight up, it was a gaming company.
All right, so gaming is in green. So go back 10 years. If you were long Nvidia, you were long because
It was
of
Xbox.
console sales.
Yeah.
Like that was what drove the stock.
And then it was crypto. And then, of course, crypto got destroyed in 22, and so did Nvidia. It fell almost 80%. And holy shit, now it is an AI company, and 88% of the revenue is from data centers. That was like effectively zero 10 years ago.
yeah, I mean, I think I'm looking at it and I'm saying to myself, they captured lightning in a bottle, and it's been known to happen. And that shift that you were just talking about, Michael, from gaming GPUs and finding out that, oh my goodness, I mean, forget the crypto just for a second because it turns out to be immaterial, but finding that the gaming GPUs are exactly what artificial intelligence needs.
Yeah.
That just like, okay, somebody's going to get lucky.
Now, somebody at Intel, for example, should have, like somebody high up at Intel, sometime around this inflection point in 2016, 2017, there's no AI, okay? So 2016, 2017, maybe a tiny bit of crypto excitement in the stock, but there's clearly also something else happening there. I think it was virtual reality and augmented reality at that time. But somebody at Intel should have said, wait a minute, we're a CPU company in a world where all of a sudden GPU sales are starting to take off. You don't have to be able to predict ChatGPT, but like somebody high up at Intel should be thinking that way. And of course, nobody can do this in real time.
Why didn't you do something?
No. I don't mean a shareholder. I mean like a CEO, God forbid, a CTO, because it would have forced them probably to either cannibalize some of their CPU business if they start talking up GPU, or it would have forced them to like make a really big investment in something that they weren't good at. And that's really hard for incumbents to do in every industry.
Absolutely true. There are good lessons to be learned from the Intel story. And I don't want to now just be dunking on Intel because I've been out of it for a few years, but there are literally good lessons for investors here. Number one, you're absolutely right. A good CEO, that's what you hire CEOs to do. You may or may not recall this, but the CEO at the time starts with a K. I'm going to mess him up with Coach K. I'm going to mess him up with the
basketball
Duke.
for
Yeah,
Duke.
exactly.
Yeah.
Chris Anich. Sorry, folks. I've forgotten. But he got kicked out.
He had a Me Too moment.
He had a Me Too moment, and it was from 10 years earlier. Now, I'm not defending any of the behavior.
Yes, you are.
No, I'm
Do
really
we have
not.
this on tape?
But there, yeah, go ahead, light me up. But it was clear that there was something else that was kicking him out. The board wanted him out for some other reason. And it came to light after that there were significant operating problems getting down to then 10 nanometers, which was the leading edge for computer chip
Where are they
creation.
at now? 2? 4?
I think 3 or below,
Yeah.
but they just couldn't get it right. And the CEO was so focused on that, he wasn't getting that done. He certainly didn't have time for strategy. One other thing, just really
When they
quickly.
kicked him out, though, the new guy said, hey, here's the new strategic move we're going to make. We're going into foundry.
I mean,
We're going to be the Taiwan semi of North America. I mean, that's what they did.
yes.
They
Well,
said
actually,
we're
that
going to
was
make chips for everybody else.
That was 2 CEOs later.
Okay.
It was a terrible strategy because it's well known in the semiconductor industry. You guys, I'm certainly know this, that the customers really don't trust Intel. Like there's really bad blood that Intel has set up within the ecosystem of semiconductors. So the idea that, oh yeah, Intel's going to produce your chips for you when these competitors don't trust them in the slightest bit, that was kind of a failed strategy. There's one other thing though, good takeaway from this.
Only the paranoid survive.
Well,
the
that's
Iron
a
Age.
good one. That's a good one.
That
I
was
like
Andy
that.
Grove's biography.
One of the founders
That's
of
what it's
Intel.
called.
Yeah.
Yeah.
So
I didn't know. I know Andy Grove, but I didn't know that.
Oops, not
But
paranoid enough.
When a company starts going down, The problem is you can't get good talent to come in. You guys will probably remember Mellanox was acquired by Nvidia.
Yeah.
And there was a bidding war between Intel and Nvidia at the time. And Mellanox basically looked at the landscape and said, we want to go with the winner.
And what they were like networking.
I forget exactly what they were.
Yeah.
But that's how the market impacts the economy, or like the real economy, because it's the currency of these companies.
Yes.
And people know, hey, you're losing, you're winning. I'm just looking at the lines on the screen. I'm going to go there.
Exactly right.
Yeah.
Exactly
when you
right.
have momentum versus when you don't have momentum, there are so many follow-on effects that come from that, such as a potential acquisition target not being interested in being bought by you, and the ripple effect of something like that can go on forever. So
Cowen put out a note last week. Channel checks indicate U.S. data center lease cancellations by Microsoft. Microsoft refuted the note. But I think this is a really interesting moment in the market because the talks over the last 10 years have been the Mag 7 carrying the market, which has been not untrue. And now there are cracks, at least in the stock prices. The Mag 7, Nvidia is weighing on the market. Market's now down over 1%. But I think that this is a good thing for a few reasons. Number one, the reintroduction of risk is healthy and normal.
Yes.
Right? And you're also seeing a lot of really healthy rotation. Financials are acting really well. Healthcare are one of the leaders. REITs are doing okay. This broadening out in a not at the highs or close to the highs, I think is a really good thing.
I think
you must love it.
I do love it. I mean, you know my positioning, which is, well, I own Nvidia. I don't own enough of it. You can't, and I'm significantly underweight the Mag 7 to begin with. But what I think is very, very interesting here is that if the three of us were looking at this a year ago, we would have said for the broadening out to happen, what's probably going to happen is a washout, a market washout. Everything gets taken out and it's on the way up. Or this is what is presumed to be the cure of the concentration, Michael, that you were talking about earlier. What we're seeing now is despite, the NASDAQ's off, the momentum names have come off the last couple of weeks, the market overall is kind of hanging in there.
Yeah.
This is a rotation without a washout, which is very, very unusual. And it's great, yes.
because you have names like Berkshire Hathaway, which is a $1 trillion company. It's the size of a Mag 7. They just reported $50 billion in earnings for last year over the weekend. That breaking $500 today, it's not enough to fully offset Nvidia, but it doesn't hurt. And there's not a lot of those, but then you've got this next tier down of, I don't know, the $200 to $500 billion stocks. They're generally acting well. Like in almost every sector that they're in, especially in finance.
So like everybody else, I'm not oblivious to the apparent risks that are out there, right? Policy uncertainty, a slowing down maybe of growth and all that sort of good stuff. But at the end of the day, this is still a consumer-driven economy. People are still spending. People are still employed. And I think, again, the reintroduction of risk, God forbid we get a pullback, right? Like a correction, 10%. It's okay. Stocks can't go straight up and up forever. You need the wall of worry to climb.
Yes. And, we may be in the middle innings of what happened last summer. And I think, Josh, I know you've spoken about it on air and I've spoken about it on air. This hilariousness, if you remember, it was like a Wednesday, the Fed met, didn't cut rates, okay? Yeah. And then Friday, literally 2 days later, you get a soft labor market report. And over the weekend, everybody's like, the Fed should cut rates. It should be an emergency rate cut. Yeah. It was absolutely hilarious. But it is, to the point you just made, Mike, absolutely necessary to reintroduce risk. A little bit of a correction here, reset the animal spirit so that you can grow again. Yeah. If you think about, what happened in August, after that happened, you were off to the races.
Yeah.
The growth scare, but then the confirmation from all the Mag 7 names that they're going to continue to spend. Yep. And we know that, like, if their stock price is pancake, they could change their minds on a dime. But, like, they all on their earnings calls 2 weeks ago, they all said, no, we're full speed ahead. And actually, we're spending more than we said originally.
The AI story's not over.
Right. Put this Apple graphic
So to that point, Apple came out and said what?
Apple's so this was kind of like a little Tim Cook special where he kind of like tricked Trump into thinking that he's responsible for something that Apple already said they were going to do. But $500 billion in new spending committed over the next 4 years.
In U.S.
In USD.
There's no way, by the way. That's a fake number.
Well, no. They say that they want to make what they say they're going to make in the United States. Apple, do you remember?
I don't remember.
Something like AI server, blah, blah, blah. 2.9 million jobs currently supported, 20,000 new Apple hires in the next 4 years in the U.S., 24 U.S. factories producing silicon for Apple products. They make their own chips now. Tim Cook said, quote, "We are bullish on the future of American innovation. Proud to build on our longstanding U.S. investments with this $500 billion commitment, doubling our advanced manufacturing fund to build in Texas.
This
Smart,
is sort of
good
yada
decision.
yada. Hit Gene Munster. This is the upshot. So Gene Munster says the company is avoiding tariffs and channeling those savings, air quote savings, into U.S. investments. I estimate that the U.S. accounts for about 35% of overall sales. That means the U.S. will generate about $147 billion in revenue this year, with roughly 120 of it coming from product revenue segment at risk of tariffs. So, had Apple not increased its U.S. investments and thus been subject to a 20% tariff, which would have negatively impacted sales and margins by 20%, it implies Apple will save $23 billion a year by avoiding the tariff. So, in other words, the bottom line is that tariff avoidance effectively pays for 60% of the $39 billion incremental U.S. investment announced today.
That makes perfect sense to me. I'm going to take this just one level up about something we've been talking about is this a growth scare in the markets overall? And when I look at what we just had up there about Apple, what I see are the hires. And I think to myself that at worst, this is a growth scare right now. You cannot have a recession unless you have layoffs. You don't have layoffs because profits are growing. You mentioned, Mike, 70%, or maybe you said consumption-led economy at 70%. Yeah. You need to have people employed for the economy to grow. Yeah, there's a little wobbliness in the weekly jobless claims this week. Big whoop. We have companies like Apple, as we just put up there, desiring to employ people in the United States. Yeah. Yes, there are legitimate concerns about, hey, the federal workforce is going to get reduced. Guess what? There's going to be a lot of demand for jobs, not just from Apple, but also from the fact that baby boomers are retiring. So, this is, I don't see the crisis. We were talking earlier about 2022. There were times that I felt like, what am I on laughing gas here? Like, what's wrong with me? And I keep evaluating. Am I seeing things through too rose-colored of glasses? I don't see the layoffs.
A lot of corporate America that thought they might have been susceptible to higher rates in 22 and 23, they got religion fast. They already acted. They already right-sized. And if they don't see a recession, because why would they? They're not going to lay off people only to bring them back in 3 quarters.
Not while profits are growing.
No.
Profits are growing meaningfully, 16% fourth quarter, year over year. You lay off people when your profits are declining. When your profits are growing as a corporation, you want to lean into it.
And that could happen. It's just not right now.
Well, you mean layoffs?
I'm saying the economy could slow, corporate growth could stall. It's just we're not seeing that right now.
Not seeing it right now.
There's some, but there's also some theater involved here. So Martin Pierce in the Information talks about this $500 billion Apple spend. This is Martin. That sounds like a big deal until you read further down in the announcement and realize it's simply describing the money Apple spends in the normal course of business. Apple's announcement was essentially a promise that it will continue to operate in the U.S. over the next 4 years. The $500 billion. So it's like Apple puts these grand statements about investment plans every few years. In 2018, the headline number was $350 billion. In 2021, it was $430 billion. So the size is getting bigger, and the company routinely spends far less than any other tech companies on CapEx. I guess proportionally is what he's saying. But like part of this is just how Tim Cook has to manage the political situation, because the reality is China is a super important market for Apple. It's also Foxconn and super important manufacturing hub. So he has to make these grand pronouncements. It's almost like this is his job.
Yeah, I think they're all doing it. I mean, I think the inauguration was a key sign. That certainly didn't happen in the first Trump administration. These guys were not there at the inauguration. They know how the game's played. Yeah. And at the end of the day, what is their job? Their job is to maximize profits.
Yeah.
That's it.
So, Jimmy, people are scared right now. And I think a lot of this is due to politics.
Yes.
But it's also due to the fact that some of their favorite stocks are falling. Nvidia, a lot of the Max 7 is under pressure. And we've got this incredible dynamic in the market where you look at AII bearish sentiment, and these are the same investors that are polled forever. These are typically, I would say probably boomers, because who answers polls these days? And right now, we were in a 3% drawdown before today, and 61% of respondents were bearish, which is a dynamic that we've never seen. You've never seen this many bears this close to the highs. Check this out. So for context, for people that are listening, you had higher readings in bears, over 60%, in 2022, in 2008, for context, in March 2020, during the pandemic, the crash, in a 22% drawdown, only 52% of people were bearish. So this is a weird dynamic that we're seeing today.
So let me give the throwaway line first. I think all three of us are looking at that and just salivating, right? I mean, we're just drooling at what that means.
Except we're only down 3% from the high.
Except for the momentum names and NASDAQ, et cetera. And that's the epicenter of what's going on.
Well, Jim, just a little bit more, then I'll throw it back to you. Bespoke tweeted, if the NASDAQ 100 closes below 2106, et cetera, today, it will be the fastest 5% decline from an all-time high since September 2020. So there is some funky shit happening, but it's nothing.
Yeah, look, you and I talk about this on the air a lot, and I think you actually said this today. I was listening to you. I tend to be more valuation oriented. You don't. I don't think I'm talking out of school here.
No, I'm astrology.
He's a price checking donkey.
No, you just so I don't sound like a jerk here. You were having a long treatise about relative strength indicators. Totally get it, and that's core to you. Valuation is kind of like not that important.
Jimmy's like all that bullshit is well and good, but
valuation's really important if I'm considering taking one of these companies private. But since I'm not, it's like number 4 on my list.
All right, I got it. But these
there's 3 things on the list.
These Palantirs and app lovins of the world. And you know this is not where I play. And I'm watching and I'm like, hey, this is kind of interesting. I kind of know how it's going to end. We all know how it's going to end. Yeah. It's going to end in a washout, and it's actually not the end. It will come down to some reasonable evaluation. These are real companies. Palantir, definitely a real company. Yeah. All right, this is like the future of defense spending is Palantir. But now all of a sudden price matters, and so you've got to have this reset. And it's healthy in the long run. I'm not making fun of anybody. I hope I don't come across as that way. But when we talk about zero time to expiry options, that is at least in part what drove these things to such highs. It's just people rolling the dice. That's not what I do. I'm going to dare to say, Josh, Mike. That's
I do it all day long.
It's antithetical to investing.
Jimmy, I say that a pullback only looks healthy in other people's stocks.
Well, but like how important to you is sentiment overall in the way that you think about like the forward opportunity? Do you like, would it stop you? Would it stop you from adding the next stock to your portfolio?
No.
Or adding more exposure
Probably
to
opposite,
equity?
Right?
If there was like sky high bullish sentiment, do you give a shit? I don't.
No.
Okay.
And here's where
people are bullish in a bull market.
Yeah,
Duh.
I don't care about that stuff.
To a fault. Okay. I really mean it, to a fault. What I do every day is I wake up in the morning and I say, where is it? Where is there $1 worth of value selling for 50 cents? And I know it's out there and I love looking for it.
Come on.
You can, Mike, but here's
But you have to buy the worst fucking stocks on the planet. But you will find it. You will find it.
You don't have to buy the worst stocks on the planet.
Okay.
But you have to be patient. And and you know this, right? There's times that I'm just sitting there like, man, this sucks. Josh is beating me up.
No, you could go out further. You could say, this is not selling at 50 cents on the dollar today, but based on the earnings, I think in 3 years,
exactly.
This is 50 cents.
Yeah, but
you could do that.
You think you're buying $1 for 50 cents, and you're buying 50 cents for $3.
You're 100% right, which is another way of saying whatever your investment philosophy is, you're going to make mistakes. I make mistakes. I was on the air. I'll do it again today, but then I want to retire it. I was remarking 2 days ago on JCPenney and Paramount, just absolute disasters. And at the time, I thought I was getting, Mike, 50 cents, $1 worth of value at 50 cents. Nobody bats 1,000. But if you do it long enough, you kind of, more than anything is you test your thesis every day. Am I right? Am I wrong? What am I missing? What's the market missing? And if you get a comfort level with that, you can stick in there through thick and thin. But there's times that like you would probably stage an intervention like, Jimmy, look at the RSI. Like I'm gonna lift your hand off of the buy button.
Not that we need to spend too much time on Paramount, but
when he said every day I wake up and I
was going to say, what's your morning routine?
I look to buy $1.50. It reminded me of the meme where somebody texted somebody like, I thought I saw you last night at whatever, and the response was I creating shareholder value? And the person goes, no, and he goes, then it wasn't me.
I would have thought that Paramount, I know like there's been obviously news surrounding the stock, but I would have thought just like with the Taylor Sheridan phenomenon that the stock would have been doing well. Maybe that's like too
because
simpleton,
the problem with it, and I lost money in Warner Brothers Discovery. So
like the streamer's working.
The problem with both of these names is the debt level.
Yeah.
And then in the case of Paramount, the bullshit between Shari and the board and Mario Gabelli.
But that's like mostly behind us. Given the what is it, an 80%
well,
wipeout?
now it's acquired. It doesn't matter.
They're going to buy Skydance.
No. It's still
Or it's
trading.
buying
Mike,
Skydance.
They're going to buy Skydance for stock.
Yeah.
Which is the dumbest thing. Like, don't use that currency. You
Depressed.
just said, and I agree, like the streaming's working. And
But
they've
do you
got
like
good
the new
content.
people taking it over?
I'm intrigued to see what they do. I'm obviously out of it, but I'm watching, and I'd like
Josh,
to
not buy
see
it.
once the don't.
No,
I'll do an intervention there. I actually, on air when you did the Warner Brothers, I was like twitching, like, oh please. But with Paramount, just let's see how much they dilute the share base to buy Skydance. That's what the thing is, and listen, we learn from our mistakes, right? Here's a critical mistake. Everybody should know this. If you invest in a company with dual class shareholders, you don't have control.
Yeah.
And Shari Redstone will do things that have nothing to do with your interest
But
as
you
a
might
Class
not
B
want
shareholder.
it. Because you know what else is dual class? Meta.
I hear you.
Google.
Alphabet.
Yep.
And they're not shy about promoting the reason for why they're dual share class. Here's what happened. Here's what really happened. They watched the situation at eBay when Carl Icahn got involved and demanded they spin off PayPal. And I think Andreessen was on the board, and Carl went after Andreessen. And then they watched the same thing happen at Apple. They watched Carl Icahn beat up Tim Cook. Now, in both cases, it worked out well for the shareholders, but it was really public and it was really acrimonious. And very shortly after that, you started seeing these companies reorganize.
Mm-hmm.
And they said, look, here's the deal. We've rewritten the Constitution and shareholders have no say in how we run this company. And if you don't like it, now is the time to sell.
Yeah.
Because we think tech people should run tech companies, not hedge fund managers from West Palm.
Yeah. And look, you're absolutely right. There are exceptions to every rule.
Yeah.
But I'm telling you, you've got to be careful with dual class shareholders, especially smaller companies.
What
And
about dilution?
Huh?
I'm sure you're not a fan of dilution.
Well, what I'm
No
a
one
fan
is.
of, what we're all a fan of, is companies that generate free cash flow and return that free cash flow in the form of share buybacks. I love share buybacks. Even something like, a stock I've had to be patient on, Citigroup, that we've talked about over the years, right? They've shrunk their share count by about 40%.
Every year.
But
And they didn't get credit for it until recently.
Exactly.
Yeah.
40%. And they're buying these shares back below tangible book value, which is, apropos of what I was saying about I wake up in the morning what I'm looking for. They're buying $1 worth of value at 70 cents on the dollar.
What's
It's
her name?
unbelievable.
Jane Fraser?
Jane Fraser.
So she's an axeman. She came in and just started chopping things off and getting rid of them and funding a huge buyback.
Mm-hmm.
And it worked.
Yeah. Well, it's working now for the last year and a half. She's
Right.
been in the office, CEO, for about 4 years. I've never seen the absolute absence of a honeymoon. Okay. Wall Street, as soon as she came in, just sold the stock.
Yeah.
And I get it because, Chuck Prince, Vikram Pandit, whoever else.
Corbett.
Michael Corbett, I think. And
Yeah.
I'm not just slamming these guys. They did their best to manage what Sandy Weil put together. It frankly was unmanageable.
Yeah.
So when Jane Fraser came in, the street just said, we don't believe anything you're going to do.
Yeah.
We've seen it before. We've seen the announcements. But she did it. She said it is unmanageable, so we're going to start hiving things off. We're going to start with the international operations. Anything that's not core, we're going to get rid of. Then when that was done, then there's still one step left to come, which is the Banamex IPO. That'll happen maybe later this year, maybe early next year. It's only delayed because you got to deal with the Mexican government. But okay, pretty much done with international right sizing. Then she went to the domestic businesses. This is what the three of us would do if we're running a company, right? If something isn't earning the cost of capital, it's gone.
You know who else is doing that now and not yet getting the credit? And maybe you'll be
I'm listening.
Maybe you'll be vindicated in this. GM doesn't stop selling shit off.
Yeah.
But this stock is it. I want it to work. No, I do. I know you want it to work more than I do because you're
I'm not
long
in,
right now.
I'm actually
you're
out
out?
of it.
The
Yeah.
stock is a roller coaster.
I mean, this stock just
Tariffs.
it seems like it just no matter what they do, it's almost magnetized to go back to $38 a share. And but they're pursuing that playbook.
Yeah.
They just got out of cruise. They're not going to do autonomous. The street doesn't want to see them do that, apparently.
Well, what the street is holding against them is the tariffs because these guys have an 8% overall
Now,
net profit.
But every year it's a different problem for them.
Fair enough.
Yeah.
Enough. I mean, I sold it in November when Trump first announced that he was going to put the tariffs on, because the math is just that wipes out profits. I don't need to go through it. It absolutely wipes out profits. I had to sell it on that news. I can't imagine that we let this company just get decimated by tariffs. Maybe I'm wrong, but in the meantime, they're looking like, without tariffs, they look like they're going to generate $11 a share in earnings. What are they selling for? 47?
It's a 7 multiple. It's fucking crazy.
I don't know. I think it's like a 5 multiple.
5 multiple. I mean, what?
Because people think the profit's going to go away with tariffs.
That's
And it
$1
will.
selling for $1. So when you're looking at these stocks, how do you say, like, okay, I'm going to buy Citi versus Wells Fargo, Bank of America? Because it's not just the quantitative numbers. This is selling for 0.8 times tangible book. This is selling for 1.1. There's got to be some sort of story that gets you to buy Citi versus Wells or Bank or something.
A very
like that.
important point is management, and that's with Jane Fraser. That's where I got big in the name. I mean, I owned a few banks at the time that she came on board, and then I really concentrated on Citigroup. By the way, side note: if you're going to be in any industry, you have to own the best company in the industry.
Oh, preach. I love this.
In financials, you
I
have
say
to.
this all the time.
Now, so if I'm going to own Citigroup, that has to be after I own JP Morgan. There can't be I own Citigroup but not JP Morgan.
Yeah.
If I'm
And you might be leaving money on the table by not buying the third best, but you're also probably leaving risk on the table too.
You said this last night to John Ford. It's such a great point. People that went looking for value in an AMD got fucking smoked. Just buy the winner.
Yeah.
The name's down
Although that stock
50% in an AI bull
was a
market.
darling 2 years ago, right?
It had a great run.
But it's never the best in anything. And this I want to get to the reshoring thing while we're on tariffs.
Let's do it.
Okay. So this is something that you started talking about, I think, around the time the infrastructure bill came out, or maybe even before that. But you had this notion that one of the biggest risks to like American prosperity became really obvious to us when we couldn't get chips for SUVs. You had parking lots filled with Chevy Tahoes waiting for a chip from God knows where to be implanted into the truck. The longshoremen and all the stuff going on at the ports. And there's like 50 other examples. But like you pointed out, the corporate America is not just going to sit here and go back to just-in-time supply chains. That's a thing of the past. They're going to have to find a way to do things closer to home, either friendshoring in Mexico or just find a way to be more efficient with manufacturing operations here in America. Are we in the third inning of that, the first inning, the seventh inning? And like, how does that inform the way that you look for investment opportunities if you think that that's still going to be something that's in force?
So the answer to the question comes down to something that I very strongly believe, and I mentioned earlier, and it's something I've been saying to clients a lot recently. Focus on policies, not politics.
Trump believes in this.
Yes.
Okay.
And not to be facetious, but this is not the first time he's been in office, right? So we had the indications from him of what he wanted to do. Then you had the pandemic, which showed up the liabilities. Okay. If you talk to like real economists, they're going to say the one thing that you should count on in economics is specialization of industries and geographies. Doesn't matter. Okay. It doesn't matter if that's what economists believe. The policies right now are designed to bring production back home. There's this new word.
No matter what the cost.
No matter what the cost.
You're right.
And, there's this new word that I didn't know existed 2 months ago called autarky. I may be mispronouncing it.
Autarky.
It means doing everything yourself, being a closed economy.
I think it's autoerotic asphyxiation. Is that the word?
It's not a good policy from an inflation point
You
of
keep
view.
talking about that.
What? If you edit that out, I quit. All right, go ahead.
It's going to be inflationary. Look, we're going to run out of workers. Okay, you're going to run out of fresh water. We're building semiconductor plants in Arizona, for crying out loud. You're going to run out of fresh water. Okay, but it is the direction we're going, regardless of whether you agree with it or not. Okay, so we can fight about it. We can feel bad about it, and I'm not making light. I know people really are upset with what's going on in Washington D.C. Our job is to make money, no matter what the environment is, no matter what we feel about it, and you've got to focus on policies. Elon
is making 2 million Teslas a year, and more than half of them are being made here. We absolutely can make things here.
We can, but we don't
I'm
have.
not saying
we
it's
don't have that many
optimal
workers.
always.
Here's what I think. Here's what I hope. Okay, here's what I hope. I hope that the Mexico-Canada tariffs are a negotiating ploy. I think they are, right? Whether it's fentanyl, whether it's the border, whether it's renegotiating the U.S.-Mexico-Canada Act, Let's hope that's the case, because you really need that production capacity, resources, whether it's plants, whether it's people, whether it's raw materials. You need that from the north and from the south. We simply can't do the autarky that is being talked about
We
here.
can't build tequila here.
Can I?
Just not good tequila.
Can I tell you the thing that I've learned over the years that the bears hate the most, but the bulls aren't even aware of it? I almost think I might be the only person that understands this sometimes, because no one else
On his level, people.
Nobody else ever talks about this, but I bet you've thought about it. There's this thing in the markets, and what's going to happen with tariffs is, I think, going to be perfectly emblematic of this. You ever see like a company come out and cut earnings guidance, and then the stock sells off, and the new earnings let's say they were supposed to do $1.10, and they say, sorry, we're actually going to do $1. And the stock, let's say, goes from 50 to 40. So 20% correction.
Where does the money go?
Wait a minute. Stop. Oh, Starbucks. so wait a minute. So follow me on this. The stock falls 20%.
Yeah.
They cut their earnings guidance from $1.10 to $1. Then they come out and report earnings and they do $1.04. The stock doesn't just go to 50, it goes to fucking 70. And this is the thing the bears hate the most. Don't people understand yet how this is going to play out? The tariffs, we're going to roil the markets, freak everybody out. Everyone on Wall Street's going to have to rewrite their S&P earnings estimates, their price targets. And then Trump's going to save the day by canceling his own tariffs. And the market's not just going to go back to where it started selling off. It's going to go 20% higher. Yeah. This is the thing that the bear. I think you're
right.
I wish there were like a German word for this, like one of those 9-syllable German words. No, but you know what I mean?
You're right. That's a great take.
This is the thing that routinely happens with individual stocks and with the overall market, where a problem is created, everybody comes out with lower estimates and gets bearish.
Starbucks is a great example.
The problem goes away, and it's not like the bulls just get back what they lost. They get back that plus 30%, and the bears are like, wait, I don't understand what just happened. This is obviously how the tariff thing will play out. I just don't know if it takes a year or one bad poll. Like, I don't, like, you know what I mean? But like, this is going to be the ultimate bear killer. The people who are getting all bared up on tariffs, this is going to suck so much for them. This is going to suck so much for them when the problem gets solved and the bulls make everything back and then some. That's my take.
Totally agree.
Have you observed that before? What?
Well, yeah, that exact scenario.
That's how, right? Have you observed this before?
Yeah. I mean,
no, he's talking about his genius at work, right? That's what you're talking about?
No, this concept. You've seen this before, right?
In Trump 1.0. I remember one.
Say more.
So we all remember, like, you woke up and you looked at Twitter, and what was he tweeting today, right?
It's like it was yesterday.
And so one day I'm in Constellation Brands. It's a liquor beer company that owns Corona, I think. It's been a long time.
I think they own Modelo.
They own Mexican beers. Yeah. He wakes up one day in like 2018 and he's pissed off at Mexico for I don't know what. And he just tweets out, we're going to put whatever, like 50% tariffs on Mexico. I wake up in the morning, I'm like looking at the futures. What's happening to Constellation Brands? It's getting pummeled, right? Yeah. And then he takes it off and it goes back up. I mean, I don't remember if it went back past the highs. That stock was very difficult.
People don't even understand. There's going to be a press conference where he says, I have saved America from tariffs. And the S&P is not just going to gain back what it lost. It's going to be euphoric.
But that's what stocks do. They go up. I mean, look, I have sold short stocks in my life. It's a miserable business. You wake up in the morning. I don't know if either of you have ever done it. You wake up in the morning and you hope for bad things to happen.
I've bought puts on stocks to speculate.
Okay.
I've never made money.
I shorted Amazon in 2011. I got out of that business.
It's miserable. You wake up in the morning.
On fundamentals?
You're hoping for bad things to happen.
Right.
And you're always a fish swimming against the current. Always, right?
Well, I think there are people that do that for a living, and that's different. I think for most people like you and I, it's not ever going to be our forte because we don't have it within ourselves to be rooting for bad outcomes.
Exactly.
But if you zoom out long enough, people are motivated to make more money, and that drives capitalism, and it drives earnings, and it drives the stock market higher over time.
Yes. We grow.
Yeah.
Right.
We grow.
This is going to take a minute to go through to listen to, but I think it's really important for this conversation. Bear with me.
If it's a severed head, I'm going to be very upset.
Where there's really a lot of uncertainty, and I have pretty strong views here. When you take a brew of tariffs, I mean, tariffs cannot be positive, okay? I mean, it's a tax. And you can imagine tit for tat if the U.S. does something, implements a tax on somebody, somebody else is going to, perhaps raise the stakes and raise their tax back. So taxes are never positive. On top of that, we have slowing immigration, which means the labor force will not grow as rapidly as previous over the last, say, 5 years. And in addition, now you have Doge, right? And wherever you lay on the Doge issue, I mean, that's austerity. And austerity, when that money's been coursing through the economy over many years, and now potentially will be reduced or stopped in many ways, has got to be negative for the economy. So you have tariffs, I could see a situation where we think growth is going to slow to 1.5% from 2.5% in the second half, and yet the unemployment rate is actually going to go down, which because of.
All right, so that's Steve Cohen speaking at Miami this week at the FII Priority Conference, which I think is like how Saudi Arabia reintroduces itself to the world as a benign. Okay, great. Congratulations on all that. So what do you think, though, about that concept in the second half of this year, at least based on how things seem to be going now? You will have the austerity that comes from the Doge layoffs and all the spending cutting, which I guess is good for the taxpayer, but maybe not great for economic data, at least not right away. You've got tariffs, which who the knows what those will look like and for how long they'll be on. And then you've got slowing immigration, which we all know one of the principal forces acting on inflation is the lack of being able to find workers for various industries. All three of those things at the same time, probably not great. And even Treasury Secretary Scott Bessent is publicly saying there might be a little bit of pain for us to achieve our objectives. It's hard to stay bullish on economic growth and cyclical stories. And Steve Cohen doesn't do this often. Yeah. He's not Druckenmiller, who like every 6 months, it's not Ray Dalio where it's always 1937. Like he does not do this very often. And he sounds pretty dour. And
he's made a lot
of
money.
So now the question is, are you smarter than Steve Cohen?
I don't know.
Better investor, though?
No.
Okay.
No.
All right.
No.
All right.
It's certainly not a better trader. But I'll give you my thoughts.
What do you say to 1.5% GDP down from an estimated 2.5 to 3? That's like that would be a material difference in people's expectations.
There may be some short-term pain. And I do think the tariffs are going to be inflationary. Let's just start with what to me is obvious. The promoters of the tariffs like to say, well, the exporting countries are going to pay for it and this, that, and the other thing.
Right.
And it's the methodology of you say something loud enough and repeat it often, maybe it'll be true, but it's not going to be true.
So inflation plus austerity plus wage pressure.
Here's my hot take. I actually like what I'm seeing in Washington, D.C., okay? And on the workforce reduction. Anybody who's watching this and is thinking that I'm an asshole and insensitive, I don't want anybody to lose a job. That's not my point. I feel terrible about that. But I think in the intermediate future, not the distant future, it's very good for the country. One of the economic dogmas, at least that I think is dogma, is that private sector workers tend to be more efficient than public sector workers. I have a small window many decades ago into being in the federal workforce, and I honestly believe that. I'm not denigrating federal workers, but I do think that they will be put to more productive uses elsewhere. It's going to be painful right now. And
the best will stay. The best will stay, and the ones who don't want to be called out on not working that hard this is their opportunity to get out of there.
Yeah, and go find another job. Now, I'm not being stupid, or at least I'm not trying to be stupid. A federal, like a Pentagon procurement officer, is not going to immediately overnight become a semi-truck driver. Like that's not, there's going to be friction and there's going to be pain, and I'm not minimizing that. But the good of the country is both getting these workers to where they're most productive, and as we've been talking about, we're going to need workers for all the production we're bringing back to the United States. We're going to need workers. The other thing, and this is a little bit esoteric, but give me just a little runway on this. It is the American government philosophy to not do anything until a crisis makes it unavoidable.
Oh, yeah, I agree with that.
Okay, so the fiscal and position of the federal government is going to end in tears if we don't do anything about it. This is the first time I've ever seen a federal government action that is designed to get in front of a crisis. And by the way, the crisis, when the rest of the world says we have enough treasuries, thank you very much, it's going to be brutal. I mean, 5% 10-year treasuries? No, think a lot higher.
Is it realistic, though, to go from a 7% deficit to 3% inside of Trump's 4 years that he has, with the clock already ticking? Like that is economically ruinous. If you think you can get through to the other side, great. I don't know.
I mean, here's the ugly thing that is how do you really do that? You kind of inflate the economy so that the percentage of GDP that you're looking at
matters less.
Yeah.
So it sounds like you actually—
Nobody's going to admit that, right? That's the quiet part out loud.
It sounds like you agree with Steve Cohen, but you disagree with the outcome. You're saying you agree that this is not going to be great for economic growth, but that the pain will be worth it because these things are overdue and they should happen.
Yes.
Okay.
And I think it's common sense that there will be
the
some
market be able to see through it the way that you do?
I don't think it is right now.
Okay.
I don't think it is right now. But let's do the numbers. Look, I like to live in numbers, right? Let's just say that 20% of the federal workforce gets let go. I think that's a big number. Maybe they'll do more, but that's 500,000 people.
Yeah.
We're creating jobs at a 175,000 a month clip. That's 3 months right there. It's 0.3% of the working age population, or the working population in the United States. That's 160 million, which is going down as baby boomers retire. Yeah. That's not me making stuff up. That's just like, it's a fact. Baby boomers will retire. The working population is going down. It sucks, and I'm not making light of people who are losing jobs, but they should be able to find other jobs.
Well, the other part of this is they're getting paid through, I don't know what month it is. September?
I think that's right.
If they tweet the right things.
Right. It's not like they're being
tweet the right things. That's
let go and being told to f off like you can't pay your mortgage tomorrow. No, I'm not minimizing it.
Yeah.
Right?
Yeah.
But hopefully in the next several months they'll be able to find work. And we'll find out.
Do you see the article this week in the Journal? 50% of consumer spending is coming from the top 10% of wealthy households.
Not being facetious, isn't that always the case? I feel like my whole life
we've
been
been saying that.
No, it was lower than that.
They say it used to be 35%.
But looking at
recently,
so then with that being considered, and looking at this just through the lens of the human impact aside, what matters to spending is that the rich keep spending, and what's going to cause them to stop spending? Is it the stock market? Is it 20% lower? What's the number?
I think it's the stock market.
Well, also the housing market too, because the amount of wealth that's been built up in these houses.
Is that what's fueling spending now, though, given how frozen the housing market is? I think it's 401k balances. People just feel rich.
I think it's all of the above.
And obviously employee stock-based compensation.
So when do people stop feeling rich? Is it where's the S&P 500? Is it 5,000?
I think it's not just how far it goes down, but how long it stays down. So I go back to last August. That was actually a correction. I think we actually got almost a 10% down from peak to trough, but it was over in literally 2 months.
Yeah.
Jimmy,
so nobody had time to register. Your neurons didn't have time to register it.
Between September of 2023 and September of 2024, so 1 year, the highest earners, the top 10%, increased their spending by 12%. Spending by working class and middle class households, meanwhile, dropped over the same period. And this is data going back to 1989, that top 10% of spenders was more like 30%, and now it's over 50%. Like so it's like, is that sustainable?
Not if you're a shareholder of Dollar General.
Yeah.
And again, sorry, I'm going to do this again.
Think about that though, when you're looking at stocks, you kind of don't want to be necessarily in the trades that cater to the lowest end consumer.
I don't think so. And again, I'm just going to be insensitive again. There's never really been a time in my economic thesis that I've said, let's depend on the lowest quintiles of consumption.
Yeah.
Okay. Sorry. I feel like an asshole, but I'm just.
No, we're talking
calling-
about the stock market.
Yeah.
By the way, that's a disgusting close. It accelerated. Nvidia's loss is down 8.5%. All right, let's see what happens tomorrow. Ugly.
Can we do some stocks to
Let's
close
do it.
things out?
Let's do it.
All right. I want to hear about what you're buying these days and why, and throw out some names.
Yeah. It's like, let's do final trades.
Let's
right
do
now.
final trades.
Cisco Systems. I really do like Cisco Systems. We all
Okay.
know it, right?
Cisco looks good.
Let's
It
take
does-
a look.
it
What's
does
happening?
look-
What's the story? I don't know anything about
Stock
it.
is uptrending.
Looks really good.
Combination of hardware and software. Okay, so you know the hardware, it's the switches and routers, and they've got partnerships with Nvidia, which keeps that business humming along. And it gets to use the letters A and I in its earning releases, so that makes things good.
That helps.
It also has been over many years growing its software business to diversify its business, and the Splunk acquisition really boosts its security
about that.
business.
Cyber. Yeah.
Yeah, which obviously is a growth area. But I think really what you're seeing in the stock as a stock market participant, you're seeing a re-rating of the multiple. And there's a direct analog, in my opinion, to Oracle, which for many, many years was just bebopping around at a mid-teens multiple. It was about 2 years ago, Oracle Cloud Services, they started catering to AI, and the stock got re-rated
Doubled.
into the but the multiple went up 50%, and that's what contributed to it. You had earnings growth and a multiple re-rating.
What's the multiple on Cisco now?
16 and a half, 17.
What should it be? You should be market multiple?
21, 22.
So if they just continue to execute, ultimately the multiple will go back to a market multiple.
Yes.
This stock is now making highs not seen since the year 2001.
And nobody's talking about it except for you.
Yeah.
That's
Well,
great.
It reminds me of
'cause it was
IBM in
hated
that way.
Yeah.
I love the comparison.
looks
I
the
love the
same.
comparison.
Yeah.
And I love the fact that IBM is surging, because remember, there was like a 10, 12-year period. I think I was in and out of it 3 times, never made money, or it just didn't go anywhere. What happened to Cisco is, like every company in the world, it got beat up during the pandemic. It was out of sync in terms of its supply chain. First, that was clogged up. Then customers came in and said, because of the supply chain, we're going to overorder. What happens when you overorder? Eventually, the supply chain fixes itself. You've got high inventories, and the order book went down. So you had to go through that. And they came out of that about a year ago. Now, when a stock has a series of bad earnings reports, it's in the penalty box, and you don't get out of the penalty box with one good earnings report.
Yeah.
I think it was like the April quarter of last year. They had the first good earnings report. Stock traded up in the after hours. Next day got pummeled, and I was like, all right, we got to do this. But when you get that second good earnings report, third good earnings report,
It gets people's attention.
It
Like,
gets
all right,
people's
maybe this
attention.
isn't a fluke.
yeah.
So we did Citi. We'll skip that. AbbVie.
Yeah. We talk about good management, and sometimes I think, like, well, what does that mean? Like, why would you say that? So here's a company that had a melting ice cube. Its main business was Humira, the anti-inflammatory, arthritis.
Would they do Skyrizi also?
So Humira came off patent, and they had to
Okay.
replace it. And they replaced it with these 2 drugs, Skyrizi and Rinvoq, which have been gangbusters. Okay,
Great
so
song, too. Nothing is everything. Like, it's one of my favorites, I think.
I'm actually
The
not
one
sure
I
what
like the
you're
best
referring
is
to, but-
I'm lowering my A1C. That's my shit. Which one is that? Does anyone know? No. It's like it'll come to me. Okay. Skyrizi is skin.
Yeah,
Okay.
exactly. Eczema, psoriasis, all that sort
All
of
right.
stuff.
Okay.
But they've completely replaced Humira. They've completely replaced the revenue, and they keep getting these new indications for it. So they grew that business organically. They've made some really good acquisitions. Now-
Jardiance. Sorry. Jardiance is lowering my A1C.
Nobody knows what you're talking about.
Where's Merck?
With
I haven't looked at
Jardiance,
that
it's
recently.
easy to see. I'm lowering my A1C.
You watch commercials?
Yeah. All right. Go on. No, you have AbbVie. Okay.
So those are the sort of things that we talk about when we talk about good management, those actions. Stock trades at around 16 times earnings, 3.2% dividend yield. So, even if you have to wait, I don't think you do, because it's got a nice run to it right now. That 3.2% keeps you warm at
All
night.
right. Delta. This one's on my list of the best stocks in the market. DAL looks amazing. Why is this going to? This is up a lot though. Delta. Why is it going to keep going?
I hate using the term Goldilocks, but I think that's what you got here,
For
right?
the best carriers. So Delta
Right, so-
and United.
United, yes.
Okay.
American, it
Not
just
as
has
good.
too much debt.
Okay.
Just too much debt.
Okay.
But look, here's what you've got. You've got low fuel prices. We've seen where
Look
crude
at
oil
Delta.
is, right?
I know. I sold it.
You've got
I know.
It's down a little bit from the high. You can pick it back up. Demand is hanging in there. Like people are still traveling, and there doesn't seem until you get layoffs, they're going to keep traveling. All right. Now, look, this is not a stock you want to own into a recession, but apropos of everything we're saying, I just don't see that happening anytime soon. So demand is good. Fuel prices are low. Contracts with their major unions have been done over the last few years, so you don't have to worry about that. That's kind of as good as it gets. So here's a stock that looks reasonably like it will earn $7.50 this year, maybe $8.50 next year. They've actually been performing so well over the last few years that they've been delevering their balance sheets. Why do airlines and similar companies get such crummy multiples? And this is trading around 7-8 times multiples. A lot of times it's because it's capital intensive and you got to fund that with debt. And equity markets don't like that. They don't like being behind a ton of debt. So as you delever, as you knock down the debt on the balance sheet, they're generating about $3-4 billion of free cash flow a year against a debt load that's around in the high teens. Right, it starts to come down where the equity holders look at this and say, well, wait a second, more of the earnings, more of the free cash flow are coming to me. I should trade this at 10 times. So $75, $85 a share, unless you get a recession. I think that's where you're going to see the stock by the end of the year.
There was a time 5 years ago that Warren Buffett was the largest shareholder in all 5 major airlines. I think he was going to be right, and then the pandemic happened.
Yeah.
And he had to sell because they all needed bailouts. They could not have stayed in business absent the bailouts. And the optics of, at that time, he was the richest man in the world.
And he confirmed that.
Here's the richest man in the world is the largest shareholder in 5 companies that are getting federal assistance. So he almost had to take the loss to save those companies. And nobody gives him credit for having done that. Because I think if it weren't thus, he would have ridden it out. Like people are like, oh, Buffett got scared. He sold the airlines. No, dickhead, he saved them. He had to get out of them in order for them to get bailed out. And they needed to be bailed out during the pandemic.
That is really interesting. I agree with you. I hadn't thought about that at all. I think you're absolutely right.
That was my theory. And
he confirmed it at one of the meetings. It was last 2 years ago. He confirmed it.
What did he say?
He basically said that. Yeah.
Yeah. Like he martyred himself so that the airlines could survive.
Okay.
And I thought that was, but I think he would have been right anyway, because those stocks were doing well. So now they've resumed doing well. And they don't act like the airlines used to act. They're acting different.
Right.
Differently. What did Delta do right that the other ones haven't done as well?
There's a few things here,
I think
but
the customer experience is really good.
The customer experience is really good. They do things like fly their planes on time, notwithstanding what happened with CrowdStrike. Was CrowdStrike over
also
the summer?
The partnership with Amex, the lounges got hot. Like they're connecting with the consumer.
I think yes, Michael, but also what they've done, and everybody's followed them, is really segmenting the cabin. So that, you go back 20 years ago.
I don't want to sit with the riffraff. I agree.
Well, go back 20 years ago. Where did they make their money? The front of the plane where business people were going to spend $4,000 to fly across, cross country. And I don't know about your company. I know my company, that ain't going to fly, right? But, you can buy a regular ticket. And if you, Jimmy, want to upgrade it, that's fine. And I may choose to just go to Economy Plus, get a little extra room.
Comfort Plus.
Whatever.
That's
Comfort
Plus is a great deal.
That's where my waistband is going.
Yeah.
But I think that's one thing they did is segmenting the cabin. They do really fly their planes on time. And I got to tell you, I'm in American Airlines. That's where I fly the most because 40 years ago, I signed up with them on their frequent flyers. So now I've got almost 1 million. But the number of times that they cancel or delay a flight is insane.
Yeah.
But I also think I'm sorry, I forget. One of you just said, hey, the airlines are doing something differently. It goes back 15 years ago to the great financial crisis. That's when they did all the things that the customers hate, but the shareholders loved, right? They stopped flying empty planes just to get a route empire. And they started segmenting what they were spending on or what they were charging on, right? So that's
charging for bags, extra bag. Yeah.
Do you remember 20 years ago, you didn't have to pay to actually check your bags?
Dude, 30 years ago, you could smoke a butt on the plane. I remember all of it. Did you have fun on the show today?
I had a great time. You guys are awesome.
I can't believe how long it took for us to get you on. It's me.
I knew one day.
All right.
Someday over the rainbow.
Dude, we had so much fun talking to you. We could do this for hours, but we won't. But I do want to tell you that, and this is from the heart, truthfully, I think you're one of the best people on financial TV, and I want to give you 3 reasons that I thought about as to why. You probably could guess what I'm going to say. Number one, I have never seen you run away from a situation where you were wrong or down in a stock or forced to change your mind. Not only do you show up in those moments, and a lot of people don't, and we know who they are. Hang on, I'm being told we have a caller. Steve W. from Short Hills, New Jersey. You have something you want to ask Jim?
Yeah, Jim sucks.
Okay. We lost whoever Steve. We lost Steve. You don't run away, and you face the music, and I think I do too. I like to be.
You absolutely.
I think
do.
I say I'm an idiot. I missed the stock, or I was wrong on this.
Yeah.
But you do that, and not a lot of people do that, and you take the punishment, which frankly we deserve sometimes. So I admire you for that. That's number one. Number two, when people mess with you, you stick up for yourself, but you never make it personal. And that's sort of a lost art in 2025, especially when you throw in the internet and Twitter. Like, people are horrendous to each other. People do not give each other an inch when they're wrong about something. It's like, you were wrong and now you should probably die. That's how people speak to each other. I've never seen you do that. Okay? Number three, as I mentioned at the top of the show, you are descended from one of the great gentlemen in the history of Wall Street, and I never got to meet him personally.
Oh, you and he would have gotten along.
You told me that a long time ago.
He would have been such good friends. You would have been up until
Talk
the
about
wee
your dad.
hours.
Talk about your family and your dad, and maybe give us some wisdom that you learned from the great Mr. Lebenthal. What was his first name?
Jim.
He was Jim as well.
Okay. And
Gentleman Jim Lebenthal is what people said.
He was a great man.
Yes.
He was a great man, and I really, and like you, just incredibly charismatic.
Handsome.
No,
Okay.
just incredibly
Okay.
charismatic.
I will
right?
take that.
Like, people want to be around you. They wanted to be around him. He was not a guy, like, he actually wasn't like me. He wouldn't get into like Macaulay duration of the bond portfolio. He had no interest in that. What he had interest in was what municipal bonds, which were his baby, that was the ad line, what they built. So he loved the subways, the sewers, the bridges, the hospitals. I mean, he really had that civic-minded attitude.
Lebenthal and Co. was in
a municipal bond
at its
brokerage.
peak, like the name in muni bonds.
It was. Now, listen, God bless Dad. He did something in the 70s, 80s, and 90s that you can't do today, which was he just bought advertising like crazy. It's too expensive to do it today. But he was like Ed Carvel and Frank Perdue, and they would just buy advertising like crazy, which gave this image of being like a national powerhouse. He was just a greater New York City bond house. But he was
everybody
definitely
knew Lebenthal, and they thought of muni bonds.
Yeah.
Okay.
I honestly have thought about this. Like, you and he, like, I would want to just be around the table with the two of you until 2 a.m. with a bottle of whiskey, because it would have been legendary. But I also, not just to repay the compliment, but I do want you to know something. You teach me every day, every time I interact with you.
Oh, wow. Look at this.
You teach me, no, I'm serious. You teach me not just information, but how to carry myself.
Yeah.
I have learned from you. Stop taking myself so goddamn seriously.
That's right. That's
and
right.
it's like every day I'm with you. You teach me.
People really appreciate you for who you are, and I do think that when people flip on the TV, they see whatever the cast is going to be for the show that day. Everyone has their favorite people. Everyone has the people they can't stand listening to. I know I fall into I polarize the audience a little bit. I understand that. It's perfectly fine. But I have to tell you, when I get the email and it says who the cast is that day and you're on the show, the first thing I say to myself is, all right, we're going to have some fun today.
Likewise.
So, all right?
And I want to include Mike in the general fan fest
Michael could never do that show.
No, listen, I have followed what you guys have done here at Ritholtz over the 12 years that I've known you, and it's absolutely fabulous. You have built a culture, and it's hard to do. We're doing it at Cerity Partners too, but it's hard to grow and maintain a culture, maintain an esprit de corps where everybody knows what the mission is and we're all doing it together. And it comes from the top. And you guys have done that. You've set that. I watch what you do.
Thank you very much, Jim. We appreciate it.
Okay.
And I want to tell people, Cerity Partners, do you have like commentary that comes out, or how do people? Is the best thing to do just watch the show?
Our thought leadership is up on the web.
Okay.
We're a name that maybe you haven't heard that much if you're outside the industry, but we're about $120 billion in assets under management.
Big firm.
1,200 people. Look, this is the space this is the space the three of us are operating in, right?
Yep.
It's the registered investment advisor space. I remember coming out of business school, everybody was like, you got to go to Wall Street and be an investment research analyst, right? And then Henry Blodgett screwed that up. And then it was,
No,
okay.
we're in the right.
And
we're in
then
the
it was,
right
you got
part
to
of
be
the
a hedge
business right
fund,
now.
and then you got to be private equity. RIA is the right place to be, and it's not a flash in the pan.
I love it. What's the thing you're most looking forward to in the future?
Oh, the calming down of. This may be so naive, right? The calming down of what's going on with Washington, D.C.
It's about to get so much crazier.
I know, but then it's got to calm down, right? Like
Right.
we all need a summer vacation.
Fair. Michael, what's the thing you're most looking forward to?
I'm looking forward to it warming up a little bit. I'm just done with winter. It's enough already, right?
It's right about that time.
It's enough. We're thawing out.
We're coming
Yeah.
close.
What are you looking forward to, Josh?
I'm going to Fort Charles Prime Rib tonight, which is my favorite
The
restaurant in New
best
York.
restaurant in the city.
I think it's literally the best restaurant in
Yeah,
the city.
it is.
So I'm going with some of my oldest friends, guys I used to coach baseball with when the boys were little, and we'll have a little mini reunion. And it's my birthday, so I'm 50-50 that they're going to pay the bill.
Happy birthday!
Thank you very. My birthday was 2 days ago. Thank you very much, though. I appreciate it. All right, that's it for us this week. I want to thank our special guest, Jim Lebenthal, one of the best, and special thanks to the whole Compound crew. You guys did an outstanding job last week when we were away with the live show with Belsky, Daniel, Duncan, Rob, Sean, Chart Kid, Matt, Nicole, Graham, Keith, and our special guest today, Travis. Travis, welcome to the fold. All right, guys, that's it from us. Thank you so much for listening. We'll talk to you soon.